Welcome to your weekly market update. Hooray, hooray, hooray. Mortgage rates continue to improve. Why is this happening? The consumer price index came in a little bit lower than anticipated. Now, it's going to be hard to get it much lower from this point. And you can see it was back, I think, beginning of April was right here since interest rates have been that low. So it's been a little over a month since rates have been this low. It's about a % improvement over the last 2.5 weeks. I don't believe it can get much better from here unless we have weakness in the jobs reports. So there's only so much that inflation can come down because there's factors that are fighting against us. And I'll show you what those are. So the headline number today came in lower than anticipated. It's 3.36 now for the year. And when you look at the core, it's 3.62. So 45% of this is rents. And rents are a lagging indicator because leases are signed for a year. So overall, 2.5% increase in rent, it's not a lot, right? And I don't believe it's going to come much down. It's not going to come down much further during this year because of the lagging indicator, right? And what is fighting against us? Definitively motor and auto insurance up 22% year over year. Some of that's technology costs of the cars. A lot of that is some of the metropolitan cities are really struggling with theft, and that drives these costs up. That's up 0.84% of the overall number. So for something that only attributes about 1.8% of the overall report, that's how much is weighted by this. To have it up 22% almost pushes the whole index up 1%. So to have something so small affect things so much is just an outlier, but likely not to continue to come down. So we have seen great gains. However, what you're going to know is we're not going to get much better from here unless we see more weakness in the jobs. That's unfortunate because we're rooting for people to lose their jobs, but that's what will push these rates down. That's what you've seen happen. And unfortunately for them and hopefully for interest rates, that's what happens. Why does this work against you, however? Because when that happens, there's going to be a whole ton of buyers that come back in the market because these rents continue to increase, and that drives people to the housing market. Every % decrease in interest rate is estimated another million buyers coming to the market. This usually takes 2 or 3 weeks. As you can see, it started happening about 2 weeks ago. We've had one of our largest weeks in leads and new pre-approvals this week. So the patterns continue to happen. That's going to be more competition for you. So be aggressive in your home search. I have a bid above ask tool that shows you when you'll recover your supposed overpay of the property. I've told this story before, but in 2019, I purchased a home. The appraisal came in $150,000 light. It almost made me cancel the deal until I looked at the data. The data said I would recover that supposed overpay in about 1.5 to 2 years. Well, I knew I was going to live in the property at least 5 to 7 years. So I said, hey, I'll make it up. I'm going to move forward, right? Well, then 2020 and 2021 happened. My property's worth double now. It's made me a couple $1 million by making that decision. People focus on the short term instead of the long term. So focus on how long you're going to be in the property, not just the right now. And if you need access to that tool, I'll be glad to show it to you. Thanks for tuning in, and let us know if you have any properties that you want us to run numbers on for you. And please let us know when you make an offer so we can call the listing agent and your agent and pitch them both on the strength of your qualification, our pre-approval guarantee, our quick closing, and our appraisal gap coverage if it applies.